We're just looking at these numbers. I mean, the retail subscription for NetEase is 360 times covered. They've had to increase that allocation. What does this kind of reception indicate when it comes to appetite for new offerings in Hong Kong?
I think definitely there is a comeback to the market. There was a time, I think initially, when the case COVID-19 and lockdown started in February, there was definitely a dip, during February till April. Many deals came to a halt, and many activities, there were a lot of reassessment of the impact and also operations and all that. The investors were also becoming more cautious at the time. But certainly in May, I think as things have seemed to slow down, the COVID-19 situation, the fundraising activities have also resumed. We are seeing the numbers, which supported a comeback of the market as well. Fundraised by subscriptions, which we saw a dip before, has now picked up in May, and the May numbers actually outperformed the January numbers by quite a bit. Monthly turnover, daily turnover have also increased by about 20%, in May as compared to April and as compared to last year at the same period. So certainly very good signs.
Right. So are we seeing pent-up demand? Because as you kind of alluded to, of course, we had everything come to a stop. You couldn't do road shows. You couldn't do, real on-the-ground due diligence, right? So is it pent-up demand that we're seeing? Or have there also been ones that have been scrapped because, market and macro conditions have changed so dramatically from the start of the year?
Definitely. I think in particular in March, we saw volatility in the market because everyone was wondering what's going to happen and what they have to do. And in April as well, which caused a lot of delays, technicalities as well, people try and find ways of doing the deals. And many of these activities have actually gone virtual later on, which I think is a good sign because everyone was still trying to find ways to get their deals out of the market. We were seeing face-to-face roadshows become virtual roadshows. Listing ceremonies itself become virtual online, online hitting of the gong. And the first one, on the Hong Kong Stock Exchange was 23rd of March, which was shortly after COVID-19 was announced, a global pandemic. So people, are still very keen, on pushing the deals. But one big caveat is, for sure, for those which have not started their listing, application work, they certainly would encounter, timetable delays, given that the travel restrictions still remain and audits and diligence, or some of the, at least at the beginning of the preparatory work, audits will need to be done on site as well. So that certainly have delayed for some firms, having to have to list in Q3 or Q4. I think financials is a biggest problem as well. Either they got hugely impacted, in which case the financials are only good for 6 months. So if they miss that window, they'll have to update their financials, and that's going to take time.
Ivy, I'm just going to jump in for a minute. We are just getting breaking news from JD.com, said to be guiding their pricing in their Hong Kong listing at $226 a share. We are just getting that news crossing now as we continue to talk about the appetite for IPOs. I am wondering the geopolitical dimension to all of this. Of course, we had the NASDAQ changes to its rules, the bill being passed in the US. Has that actually encouraged do you expect this to be a sustained kind of exodus of Chinese companies now coming home?
I think it's twofold. I think one of that is the reforms of the Hong Kong Stock Exchange. In the past, dual class system was impossible, and now, it has become possible, since last year, and that's why we saw Alibaba, coming home last year. And it also makes it easier, for these mega giants to come over to Hong Kong by way of secondary listing, and hence we are also seeing NetEase and JD.com. And certainly the change or the possible change of the NASDAQ rule would play a big part of that as well. If ultimately passed by the House and signed by the President, it would make it harder for some of the Chinese companies to list, and for some of them which are already listed, maybe at the risk of being delisted. So I think that's why for some of the giants or some of the currently listed Chinese companies on the U.S. Stock exchange, they might start thinking about, whether a secondary listing, a backup listing venue would be beneficial to them. And I think the natural winners would then be Hong Kong Stock Exchange and possibly the STAR Market on the Shanghai Stock Exchange, and also some of the listing venues in some of the ASEAN countries such as Singapore, Taiwan. They may be able to benefit from this as well. We already seeing some of the growth areas in this space.